So you're saying that tax planning, these are measures taken by the taxpayer with an aim of reducing, tax liability, in a legal way. Good stop. Continue by saying tax planning is therefore a tax avoidance measure. So you're trying to avoid tax is a legal way of reducing your tax liability without breaking the law. And then you say tax evasion is an illegal way of reducing tax liability. Tax evasion is an illegal way of reducing tax liability by account manipulation. i.e. overstatement of expenses and understatement of incomes. So you reduce your incomes, you increase your expenses so that profits zako zikuwe kidogo, taxes zikuwe pia kidogo. And remember, you're saying it's illegal. Something that is illegal is something that is criminal. Yeah. Then finally talk about tax fraud. Tax fraud is where the taxpayer fails to pay. Tax fraud is where the taxpayer fails to pay the correct amount of taxes. The taxpayer fails to pay the correct amount of taxes as expected. So ushazi calculate, umepata taxes unafaa ulipe ni 20 million, then unajaribu kucheza na staff wa KRA. Ili wakupunguzia, wambia nipunguzie hizi taxes zikuje 5 million, nikupe kakitu. So hiyo ni fraud, huo ni wizi. Sasa huo ni wizi. Then give me a sponsor topic now. Tax planning for companies. Tax planning for companies. So what can the companies do to reduce their tax liability? Number one, use of debt finance. Use of debt finance in its capital structure. Use of debt finance in its capital structure. Explain that point by saying this. Interest on debt is a tax allowable expense. The use of debt finance in its capital structure. Why do we need that? Because the interest on debt is a tax allowable expense. You know, tax allowable expenses reduces the incomes. So by having debt in the capital structure, the finance cost will be an expense, right? Will be an expense. So if a company has no debt, so if company A has debt and company B has no debt, company A will pay less taxes under normal circumstances if all other factors remain constant, because interest reduces the taxable income, unlike the dividends. So dividends are recovered tax. Number two, purchase of fixed assets. Purchase of fixed assets instead of leasing. Purchase of fixed assets instead of leasing. So badala ya kuzirent ama kuzilease, zinunue. Let's say that when they're saying this. Capital allowances claimed. Capital allowances claimed are likely to be of higher value. Capital allowances claimed are likely to be of higher value compared to the lease rentals. Number two, investing. Number three, investing overseas. So kama ni kununua shares na kampuni ambazo haziko Kenya. Kama ni kuinvest kwa debentures, invest in the debentures of the companies that are not in Kenya. What are the benefits of that? The dividends and interest from outside Kenya, are they exempt? Yes, they are. So just say interest and dividends received from outside Kenya, interest and dividends received from investments outside Kenya, interest and dividends received from investments outside Kenya are tax exempt. And have another one, number 4. The individuals get the letter, like it says, combined pamoja. Because individuals, we have the common ones that affects both individuals and companies, but we have the unique ones that affect the businesses. Like you cannot tell the examiner that as a tax planning measure for an individual, buy an asset instead of leasing. That does not affect an individual here. Because when you do a personal, you claim capital allowance on it. So that's under which incomes. But a capital allowance would be an expense to the business if it has the assets. Yes, investment outside Kenya, fortunately, it is an income that both the individuals and companies can get. So in either way, it will benefit for what wawili, kampuni ama individuals. We shall also highlight it in the tax planning. Another one. Donations to a charitable institution. Donations to a charitable institution. Stop the listening. Such donations are allowable expenses. Such donations are allowable expenses. What's the charitable institution? Sometimes we resort the charitable institution among a church. Yeah? The foundations. Ya nyumba. The NGOs. So what makes an NGO a charitable institution? They are non-profit making organizations. Although your gender skills are misused. You come up a church is non-profit making organization. Hata NGOs engage kwa biashara siku hizi, ndio. So nasema usingoje donations peke yake. At least we invest upate kitu. But anyway, just say this so that we are able to kill two birds with one stone. Say a charitable institution is an institution that has the following. Is an institution that has the following characteristics. It's an institution that has the following characteristics. Number 1 or number A, it is public in nature. It it is public in nature. So the most important thing, it is public in nature, meaning inaweza kuwa a private owned, lakini it is there to serve the entire public. It does not discriminate. So it's public in nature. Number B, it was formed to relieve the distress of poverty and hunger. It was formed to relieve the distress of poverty and hunger, stop suffering. So that's where the children's home comes in. Nyumba ya wazee. We can even have the home for the disabled, right? Number C, it was formed to promote education. It was formed to promote education. It was formed to promote education, so you also fit there, because we don't discriminate, we are public in nature. And number D, it was formed to promote religion. It was formed to promote religion. So hapo ndo kwenye church kwa ina form here. That's why churches never pay taxes, the corporation taxes. Yeah, the children's home, the NGOs, they don't pay those taxes. Then you just say this, just put the star. They are tax exempted. They are tax exempted on all their incomes. They are tax exempted on all their incomes. So somebody asking you about write short notes on the following taxation of charitable institutions. You just tell him that charitable, that you also look at the marks. Now somebody can tell you, write the short notes on the following. Taxation of charitable institutions and akupa 4 marks. You know, together 4 marks, when the same to their tax exempt, unapopata all the 4 marks. Ndio. Lazima umwambie ka story fulani. Charitable institutions are tax exempted on condition that they meet the following features, or they meet the following conditions. Okay, these are conditions ambazo tumezimention. Sasa at least mtu akue smart. We try to look at what could be the likely allocation of these 4 marks. Just somebody telling me to write some short notes on the following. That's a very open question. Taxation of charitable institution. Yes, we all know that charitable institutions are tax exempted. But under what circumstances will they be tax exempted? If they are public in nature, so you define what a charitable institution is. So you can even have that as a tax planning measure for a company. Number 5. So starting up a business, starting up a charitable organization. So you can donation to a charitable organization, but you can also start up one. So starting up a charitable organization. You utalipa tax for your organization. So you're reducing your tax liability without breaking the law. Setting up a charitable organization. Yana moja ya mwisho tusonge mbele. Ziko moja. Zingine tutapenda nazo kwa maswali tuone. Another one, the final one, question number 6. Starting up a business. Starting up a business for exportation. Setting up a business for exportation, into brackets, export processing zone, EPZ. EPZ. What are the benefits of EPZ? All their exports are zero rated. So just say that all the exports will attract VAT at 0%. All the exports will attract VAT at 0%. Full stop. Continue by saying, in addition, The EPZ, in addition, the EPZ will enjoy a tax holiday. Yeah, and I'm coming back to your question and answer it. In addition, the EPZ will enjoy a tax holiday for the first 10 years of its operations. Will enjoy a tax holiday for the first 10 years of its operation. And pay tax at a lower rate, at a lower corporation rate, and pay tax at a lower corporation rate of 25% from the 11th to the 20th year, and pay tax at a lower corporation rate of 25% from the 11th to the 20th year. So imagine unaanzisha EPZ, the first 10 years wengine wakilipa tax ya 30% wanalipa 0. Yeah, for the first 10 years 0%. For the next 10 years, that is 11 to 20, a lower rate of 25%. You know, if your taxable income is 1 billion, 1 billion. If company A is paying tax of 30%, company B is paying tax of 25%, saving 5% of 1 billion is not small money. Yeah, it's not small money. You can even have and continue by saying this. They also enjoy capital allowances. They also enjoy capital allowances on their investments in assets. They also enjoy capital allowances on their investments in assets. Now, I'm seeing a question on, we're being asked about, I think you're referring to the charitable institutions, where you say that they're tax exempt. Yes, the salaries, the employees will be taxed. But remember, the salaries, the employees is not taxed on the employer. The charitable institution is the employer. So to the employer, salaries, the expenses, eventually in a reduced profit circuit. But as an individual, you don't own the charitable institution. So your salary unalipwa, hiyo ni income ambayo itafaa itaxiwe. Because you're not earning that income as a charitable organization, you're earning that income as an individual. Individual must pay taxes, the pay. Yeah, the pay. So ile pay ambayo itadeductiwa at the source, utailipa at the end of the year, file your returns. If the employer if the employer deducted a lesser amount, you pay the difference. Kama ni overcharge, utapata refund ukiapply.
That's not mean about charitable organization for which you have said, in a question, in a charitable organization, can you do your own other business? Can you invest in yourself? A charitable organization, can it also invest?
Yeah. It's not even can it also invest, it do invest.
And that investment,
Because the church owns schools. And the church owns hospitals. And the church has social halls for hire. But the point is this: all the income that you are earning as a charitable institution, as long as that income is going back to the charity work, the income will be tax exempted. So why are you investing? You are investing to generate revenue to ensure that your charity work is done. So all the income that you are getting out of all your investment to support your charitable work will be tax exempt. Whether you are getting it as a donation, ama umekuwa smart invest here and there. So it's fully tax exempt. So, how's something say?
income, any income. The issue of overheads, any other income, investments such as home, hospitals, tax, only if it's not used to charitable work. So you have
Only if
it's not only if it's used for charitable.
yeah, that's the point. The income that you're earning must be used for charitable purposes. But if it's going somewhere else, then you're going away from your initial purpose of existence. So that means you're becoming an entrepreneur. Because charitable organization should not be an entrepreneur, right? It should be there to serve the common public. Yeah. That's why the statement is very important. Only if it will only be taxed if that income that is not used for charitable purposes will be taxed. Yeah.
Asked a question on which one can avoid tax. I can list all things that we are talking about.
That's why I mentioned that as a company. So can you talk about as individuals? Because I can see you individuals, son. Because you also want to learn how you can run away from this taxation. So tax planning for individuals. The way individuals may go just Number one. Starting up a business. Starting up a business as a company. Starting up a business as a company instead of sole trader or partnership. Starting up a business as a company instead of sole trader or partnership. What are the benefits of that? Si kampuni ni mtu kivyake. Sindio? The company is an independent person who is responsible for its own taxes. But a partnership, income from the partnership is taxed on the partners. So as an individual, I'll avoid that tax by separating myself from the business. So I can just explain by saying a company is a separate legal entity. A company is a separate legal entity responsible to pay its own taxes. Separate legal entity responsible to pay its own taxes. Number two, investing in companies outside Kenya. Investing in companies outside Kenya, i.e., such dividends and interest from the investments, such dividends and interest from these investments are tax exempt. From these investments are tax exempt. Number three, we can even have donations to charitable institutions. Donations to charitable institutions. Another one, taking up insurance policies. Taking up insurance policy. What is the benefit of having an insurance cover? You get an insurance relief. Sewani, waizima insurance whatever wakitumit, wakosange kutuambia hiyo kitu. Insurance company yetu ni nzuri sana kuliko zingine kwa sababu inapea insurance relief. So if you've never learned about it, it's okay. Yeye mnapeana hiyo sawa nitaichukua. But anyway, it's for all insurances. So just say this. An insurance relief, which is the lower of shilling 60,000 per annum, the lower of shilling 60,000 per annum, and 15% of total premiums. 15% of total premiums is enjoyed. So something that is a relief is something that reduces your liability. So utaangalia hizo premiums umelipa kwa mwaka mzima ni ngapi? Whether umelipiwa na employer ama umelipa wewe mwenyewe. The total premiums that your insurance policy or insurance cover will attract. Whether somebody donated for you, we're looking at how much premiums are there for this year as far as your insurance cover is concerned. We take the 15% of the premiums, that is for the whole year. We compare it to the set limit. And the set limit is 60K for the whole year. We take the lower. So the benefit or the relief cannot exceed 16,000. Yes. So in simple terms, you get an insurance relief calculated at 15% of the premiums, not exceeding 60,000. So the relief will not exceed 60,000, but it's 15% of your premiums. If 15% of your premiums gives us 100,000, then you've exceeded the limit. So your relief will be capped at 60K. Another tax planning measure, number 5. Contribution to a registered pension scheme. Underline the word registered. Contribution to a registered pension scheme, stroke provident fund. I just give e.g. NSSF. Then we say up to Kenya shillings, 240,000 per annum. Up to Kenya shillings, 240,000 per annum of the contribution will be allowable expense. 240,000 per annum of the contribution will be allowable expense. What is it per month? 240 by 12? The 20K. Come on, I did not payroll. Wherever you work, if God blessed you with some work. Come on, deal na payroll. Lakatu na deal na stories za NSSF. Tunakuanga na what the employer gives and what the employee gives. Squeeze me just tier 1, tier 2. But eventually, we have the maximum that will be an expense because employee, by the way, if I'm talking about my income, what I spend, what I pay is the expense. What I receive is the income. So the 240,000 we're looking at this part that the employee contributes. Because employee atatoa, employer pia mtolee. Chenye employer ametoa ni tax exempt. Tunaenda kuimention. Chenye employee ametoa is an expense. That's why before you calculate the pay, kwa una subtract ile yenye employer ame contribute. So you cannot subtract the whole figure. The maximum you can subtract per month is 20K. Per annum, it transmits to 240,000 per annum. That's how. So up to 240,000 of the employee's contribution is allowable expense. That's what we've said, right? Effective. So it's 25,000. Currently, it's 25,000 per month. With the current budget, yeah. That's why we're not even talking about it. Because for tax purposes, we are always 1 year behind. We're using the Act of 2021. So only tutawafunza next year, tutawafunza hiyo. Sasa the new hata tumention size. Hata najua mnai-apply kwa job, lakini kwa example si apply. Sasa because angalia maswali za tax, by the way, it's good. By the way, these things you're bringing up, they're very important for us. We try to understand how the setting is done. Sindio? Ukiangalia exam ya last year April, maswali zake za required is for the year ended 31st December 2021. Exam ilifanywa 2020, ilifanywa as per the Act of 2019. We are always 1 year behind for the purposes of our exams. So we are not very keen to see how the Act has changed this year, but you are very keen on how the Act was last year. That's why I think kuna maswali tumefanya na kuambia assume corporation rate of 25%. Hizo maswali zimekuwa 2021. 2021 corporation rate ilikuwa 25%. But corporation rate ya 25% ilikuwa wakati wa COVID, which was 2020, sindio? Yeah, so we are always 1 year behind. But again, it's good for our knowledge. Yeah, it's good for our knowledge. Anyway, let's just put a dash, then you say employer's contribution. Employer's contribution, what's the same? Employer's contribution towards the same is a non-taxable benefit. Employer's contribution towards the same is a non-taxable benefit. What do I mean now? NSSF. Employer ako na pati yake anakutolea, na wewe pia uko na pati yako ambayo unatoa. Chenye kimetoka kwa employer, hiyo ni income umeearn. Because hata kama utaipata sasa umekuwekea mahali, ile siku utaamua kuretire utaelea. Na utachukua yako peke yako, utachukua yako plus ya employer. That is your benefit. So what the employer is paying for you is tax exempt. And what you pay is an expense that is allowable. Allowable expense reduces the profit, and non-taxable income makes you earn an income without paying tax on it.
Someone has that as a tax
So put a standard, you say, upon retirement, the pension income, upon retirement, the pension income is tax exempt. Up to Kenya shillings. It's tax exempt up to Kenya shillings 300,000 per annum. 300,000 per annum if received periodically. 300,000 per annum if received periodically, or shilling 600,000, or shilling 600,000 if received as a lump sum. If received as a lump sum. So kama unaipata kama one off, the first 600,000, no tax on it, so it'll be taxed on the balance. So if your income is more than 600,000, is when you pay tax on the excess. If it's as a lump sum, but periodically you only pay tax on anything that is above 300,000. Now periodically inamaanisha unaipata maybe monthly, semi-annually, annually, as long as we can associate it. It's not coming mara moja, it's coming for many periods. I think that one is well answered. So we can have another one. can have another tax planning measure number 6. So number 6, taking up a loan, stroke mortgage for own residential house, taking up a loan stroke mortgage for own residential house from a recognized financial institution. So as an individual, I want to own a home. And I repeat, for own residential house. Unataka kuwa na nyumba ya wewe kuishi ndani na familia yako. That is the mortgage you're talking about. Not taking up a loan to construct some rental houses. If you take up a loan to put up some rental houses, that's when you are investing. So you'll be looking at the rental income. Ile loan umelipa, the interest on the loan will form part of the cost of the houses, but if you take up a loan to build your own house to stay in with your family, what are the tax implications of that? We say this. Up to Kenya shillings 300,000 per annum. Up to Kenya shillings 300,000 per annum of the mortgage interest. Will be allowable expense. Up to Kenya shillings 300,000 per annum of the mortgage interest will be allowable expense. So let's see if we can get some questions to the angalie. Now, we're looking at an individual a situation where probably as an individual, you run a business. So meaning you're a sole trader. Or you have some, let's just say you have a partnership. So there's a way you can say, this income I earned from the business, and out of that income, these are the expenses that I paid. Among those expenses, if you ever donate to a charitable institution, you can also consider it as an expense. But who anasema tafuta receipt? Sometimes no, there are those items that you can substantiate. If you pay, if you remove some 100,000 from your shop to go and donate to a church, you should be able to account for it. Ndio. Matumaza siasa. Sasa hii politics ya saizi inaambatana na mtihani yetu. You can also donate because your employment income is your income. And if there is a way you can account for it when filing your returns, although if you're filing your returns as an employee, you're filing your returns as an employment income alone. I'm just wondering how you'll account for this donation under the items. Because if your sole income is employment, they really limit the expenses that you can allow. Ndio. Ukiangalia kwa items, hakunanga mahali pa donation. Do you have a car? Does it that you can enjoy the housing benefits? Has your employer given you a car? Do you have an insurance bill, an insurance cover? Things of the sort. Like, sijaona provision ya, have you ever donated to a church? Kiare pia si wajinga wanajua to exploit, ndio. Basi utasema offering donation.
Sasa, for instance, I myself, I contribute an insurance cover.
Yes. You have an insurance cover?
Which I pay from my own. I need to talk about source. Am I supposed to disclose it to an employer one
There's a reason as to why your employer has no access to your iTax. He only has access to your PIN, but not your iTax. Your iTax hiyo ni siri yako na KRA. Hiyo insurance ambayo una contribute ni siri yako na insurance company yako na labda KRA kama unataka relief. But you see, that's why you can decide to disclose it to the employer if you want, but you're not under any obligation. You shouldn't even be disclosing. Yaani kama kusema nimeenda kununua mkate cha niambie employer nilinunua mkate. So eventually, that's why ukimaliza mwaka una file returns zako by June.
No, but whatever you know, you carry out to show your pesa.
Whatever you update on the payroll,
Yeah.
so you get the record pesa.
That's what I'm saying. You can give it to them if you don't want the stories up to claim refund. Still okay. When you give to the employer, that means that you have a good accountant at a deduct insurance relief here. But I think that, it can still work. You give the employer a better pay yako and less the insurance relief. It reduces your pay. At the end of the day, if you file returns, you'll also account for it. Yeah. So that it balances off, you're not in a refund position. Kama accountant atafanya kazi nzuri. Yeah. Let's see if we can get a question on tax planning. If you take a mortgage from your employer, in fact, it's also another form of tax planning. Can you have it down so that I explain by having it as a point? So number 6 or number 7? Number 7. Taking up a loan. So tax planning measure for individual number 7. Taking up a loan from the employer at an interest rate. Taking up a loan from the employer at an interest rate that is lower than the market interest rate. At an interest rate that is lower than the market rate or the market interest rate. So ile kwa tunasema ukienda kwa bank kuchukua hiyo loan watakucharge interest ya maybe 18%. But employer, this one is for the market, but the employer is giving you an offer. Anakwambia nitakucharge rate ya maybe 10%. And I'm giving you a loan of like 1 million. Now, there's something that you're saving out of this. You're saving some 8%. So that 8% that you're saving is a benefit. That's how. So just say this. The interest savings on that loan, compared with the market, the interest savings on that loan compared with the market is known as a fringe benefit. Is known as a fringe benefit. if the loan was offered, anytime from, the loan was offered anytime from 12th June 1998. The loan was offered anytime from 12th June 1998. And the benefit is taxed to the employer. And the benefit is taxed to the employer. So when you may enjoy kama employee, you're getting it free of tax. You're getting it free of tax. Just put a dash hapo chini useme hivi. If the loan was given before 12th June 1998, if the loan was given before 12th June 1998, the loan is, the benefit is low interest benefit. Low interest benefit. And it was taxed to the employee. No interest benefit, and it was taxed to the employee. So before, up to 11th June 1998, your benefit, your loan, the low interest benefit, women you may enjoy ulipia tax. But currently, 1998 ni kitambo, still. Anytime you're having a question right now where the employer has given you a loan, the free benefit, the employer pays tax on it, so you enjoy it free of tax. So ziko easy tax planning measures. Can you just check what is in the question so that you can apply them?
The taxable income. That's the interest of the for individual apply for partnership. That's interest on
But you'll always, wakati unafanya returns zako by 30th June. Sipo nauliza, do you have a mortgage? That's why you account for the mortgages. Because if you have a mortgage, you'll say yes. You have nothing to account for because you received it as a benefit. You don't need to put it anywhere because anything you put, anything what unaweka hapa kwa income, kwa taxable income, kwa tunalipia tax. Ile ya tulipia tax kwa tunaweka dash.
So yeah,
That's why to say it is taxed on the employer. You as the individual will get it free of tax. Maybe before we talk, we'll look at the past because I've seen a question that has that one. Can you just just have a small subtopic on remuneration packages? Remuneration packages. Kama unapenda jina yenye isumbui sana kutamka, nasema employment benefits. Remuneration imekataa. Andika employment benefits. Employment benefits. Say they include They include cash benefits, and non-cash benefits. They include cash benefits and non-cash benefits. So the employment benefits can either be in cash or in non-cash form. Let's talk about cash benefits, stock rewards include cash benefits, stock rewards include. They have salaries and wages, comma, commission paid, comma, allowances ni kama house allowance, car allowance, traveling, hardship, those allowances, comma, subsistence allowance into brackets per diem. How do you tax per diem? The 2,000? This is 2,000? Ama hatutax kabisa? Huh? Depend on? Depend on? When you hear taxpayer saying it will depend, but I don't want to disclose. That's good. The taxpayer as I disagree, collect that. But I think from is it 2021 the parliament exceeded it to 5,000 per day, and we're looking at the act of 2021. And for examination purposes, ingawaje watu wengi sana wanaitumia kama impressed, especially from an employment perspective. Like kama impressed tunaidia serikali. Ndio. You don't have to disclose. So let's do as per the act, not the way. So up per diem, just put a dash, then you say up to Kenya shillings 5,000 per day. Up to Kenya shillings 5,000 per day is tax exempt. We'll stop continue by saying this. It is the amount paid. It is the amount paid to the employee. It is the amount paid to the employee while on official duties, outside the main office. While on official duties outside the main office. E.g. in a seminar or workshop. E.g. in a seminar or workshop. So the employer ametuma seminar Mombasa, anakupa some accommodation, anakupa some allocation there. The government looks at it and says, out of all that amount that is giving you, at least let us have some 5,000 per day to take care of your expenses, scanning, accommodation, entertainment, so that if he gives you anything above 5,000, Libya tax the excess. Number, let's not need. Just put the next point alafu seme non-taxable benefits.
Allowances.
Yes, they're taxed. So we are there for non-cash benefits. Non-cash benefits. You got me somebody? Non-taxable tena. Non-cash benefits. Well, it's non-taxable. Sorry. What is the time? So the first one we've been talking about the cash benefits. Ile umepewa pesa, kama ni kwa payroll, kwa payslip ni kwa banki yako pesa zinawekwa. Ndio. So sorry na telephone pesa unapewa airtime. Kama wanakulipia bili. Kama wamekupa airtime basi ni airtime allowance. The fall under allowances. Wakupea cash. It will be a cash benefit, but again it depends. Wamekupa cash kununua airtime ya nini? Obviously. So the non-cash benefits. Non-cash benefits. So maybe we try to make up with sababu tumesonga kidogo. Saidia ajue mfika wapi. So that the space that remains behind. So non-cash benefits. We have the number A. The number A. Can we start with the car benefit? Car benefit. What's the difference between a car benefit and car allowance? The first difference is the spelling. Car benefit and car allowance. Want to say something?
Car benefit you're using it
for your own personal for your own personal use, and the car allowance. Okay. Car benefit, car allowance. You're given the your tax, you're very keen on the words. Like transport allowance. But it's very true. An allowance is cash. An allowance, the allowance tumetoka cash benefits. So car allowance ni pesa umepewa as an addition to your income. Ndio. To help you, kama unataka kutumia matatu ni shida yako. Lakini tumekuallocatea an allowance for a car allowance of like maybe 20,000 per month. So whether you use the 20,000 in hiring the car, it's upon you. But the car benefit, employer anakupa gari yake utumie. Those are different types of allowances. Car allowance, no one cares whether you have a car or not, or whether you're using your car or not. But as we are giving you this employment, we have these benefits for you. We shall give you a car allowance of like 20,000. We shall give you a house allowance of like 100,000. We don't care whether you are living in that house of 100,000 or not. But you're given a house, that will be the housing benefit. You're given a company car, that now becomes a car benefit. So just say it is where the employer provides the employee with a company car, with the company motor vehicle. It's where the employer provides the employee with a company motor vehicle. tunaweza sema company kana anatoa loan. For use on private purposes. For use on private purposes. Now again, remember tunasema, we're talking about employment benefits. It will never be a benefit if it is not serving you as an individual. Employer anaweza provide gari na hiyo ni gari ya kufanyia wakati uko kazini. That will never be a benefit to you. A benefit you need that part that you enjoy on private capacity. That is what is your benefit. Otherwise, ukipewa gari ya kukimbilia kutoka one office to another, when you're moving from one office to another to check on some things, the employer facilitates. You can be allocated a car when on official duties. That will never be a benefit to you. A benefit is what you enjoy on private capacity.
But what about if the car just picks you from home to the job, and takes you back, and then it can be parked at the DO's office and all that?
Then it's not a benefit.
That's not for tolerance.
Then it's not a benefit. Your little employer and will provide free transport services, but not a car benefit. It becomes a car benefit. Then how do you account for it? We're learning, by the way, tax by the way is very diverse.
So you account for it by you are signing the work ticket. The driver has a ticket. When he comes with you, okay, you sign that he has come at 8:30. Now you have broken back at 6 p.m. Then you take the car where it is supposed to be parked.
So that we say that will you account for it? Because there are two things here. It's like the employer is providing for you free transport.
Yes.
To and from office.
Yes.
So you are wondering whether you should account for it as a free transport or a car benefit, because accounting for car benefit, and if you put it as a car benefit from an individual tax planning perspective, I'm suffering. Because I'm not enjoying it so that much, yanafani taxiwe.
Home to office and bank, some amount you have saved.
And the entire house can be carried on that vehicle.
It's not the
And
It is the employer fueling the car.
No, it's not the
It is the employer who is fueling the car.
It's a driver.
It's somehow. You know, when you're given a car and you're also given a driver, then you're enjoying two benefits. Because there's a servant, the employer is paying for your servant, and the employer is also giving you a car. So you have two benefits to tax there. So let's first of all account for the car and have to turn it. But when he's attached, when he's driving you, he's serving you. And every time anakuserve, employer anafaa mlipe. Because afanye kazi yake, afanya kazi ya employer. So you have a specific person attached to your car to be driving you around. It's just the same way as having a specific person attached to you to be cooking for you. Yeah. And the employer is paying the bills, is paying the salary for that person. So you are enjoying the service, but without you paying anything. That's a benefit to you. So I tax mother PLL. So we say the taxable benefit is the higher of. The taxable benefit is the higher of. Number A or number one, 2% per month. 2% per month. Kama ni mwaka mzima ni 24%. Ndio. Of the total cost of the car. 2% per month of the total cost of the car. Then we have number two. Number two, we have the prescribed amount. Prescribed amount based on CC ratings. Prescribed amount based on CC ratings. So you look at the two, then you take the higher. Then you just put a star up and say, if the car is leased out, by the employer, so kama gari si employer haezi pata cost yake. If the car is leased out by the employer, the lease payments by the employer are considered. The lease payments by the employer are considered and compared with CC ratings. Are considered and compared with CC ratings. The lease payments by the employer are considered and compared with CC ratings. So the difference is that kama employer rent out the car, if I pay for your operations, then it doesn't have the cost of that car. You cannot do the 2% per month of the cost. Gari si yake kama si yako hizi tu cost. Lakini si kuna ile amount analipa kila mwezi ama kila mwaka while renting that car. So look at how much is paying compared with the CC ratings. And CC ratings iko kwa leakage. About the engine capacity. Somebody else. Number B. Let's talk about servants. Servants provided by the employer. Servants provided by the employer to the employee. E.g. So because we've talked about the driver, let's say e.g. driver. When you join us with the house manager, you know the employer can be paying for your house manager. Take a second. House manager. We can even have the security personnel. Your employer can pay for your gardener if he loves you so much. Gardener,
Yes.
right? Yeah, how? We can etc. then you just say the benefit, the taxable benefit is the higher of. The taxable benefit is the higher of. We have actual amount paid by employer. Actual amount paid by employer. So we compare that one with the current market value. Current market value. So look at the two, then we take the higher. In an examination perspective, you're not even required to cram. So the minimum wage. Kama examiner ataka utumie the current market value, atakupa the value. Kama hajakupa, then your current market value becomes 0. Una compare na ile yenye imelipwa, you take the higher. So you tax what the employer has paid.
The rates has been indicated.
In the linkage you don't have for the servants, but we have for the services. So can we have number C? Services provided by the employer. Services provided by the employer to the employee. E.g., number 1, we have electricity bills. Electricity bills. So employer anaamua anapenda sana mpaka na kulipia bills za stima. So electricity bills, so we just summarize, question na story more. So we shall compare the actual amount paid by employer. So we compare it to the prescribed amount. Prescribed amount for electricity is how much in the linkage? Is it 18,000 per annum? Is it 18,000 per annum?
Yes.
For electricity? There is one for agricultural employers, now wengine wa kawaida. Wengine wa kawaida ni 18K, ndio. Is it 10,800?
Yes.
Hiyo ni agricultural employees. Juu yake kuna 18K. So you be careful. If your employer is a farmer, then you deal with 10,800. So now for agricultural employees, the benefit your water and electricity, if your employer is a farmer, is different from these other normal employers. So for the normal employers, you can see it's 18K for the electricity and 6K for water. So I compare that. So inamaanisha kuwa sometimes when you're given a chance, now from the tax planning perspective, by the way, zitu tunaandika mob sana zinakusaidia kwa tax planning. Umepewa job offer na unaambiwa kwa mwaka tutakuwa tunakulipia stima ya 5,000. Afadhali umwambie asikulipie stima. Akupe your benefit in other ways. Because akikulipia stima ya 5K kwa mwaka, then it means you are only enjoying 5K, but you'll pay tax on 18K. Because you're saying you're comparing this with a set limit, alafu unachukua the higher. So the minimum you can be taxed on is 18K. Sasa, so weka hizo mbili pamoja, chukua the higher. Ya pili kama tuko na water bills. Water bills pia tunaangalia the actual amount paid by employer. We compare it to the prescribed amount. Prescribed amount ambayo tumeona ni pesa ngapi? 6,000 per annum. Then we take what? The higher. So if your employer decides to pay for your water bills, let the bill for the whole year be at least 6,000. Sasa, because look at it, kama ni stima, kwa mwaka mzima amekulipia 5k, na mwingine anasema atakulipia 20k, afadhali hata mwenye anakulipia 20k. Because kulipia kwa 20k, you'll be taxed on the 20k, at least you enjoy the benefit. Ndio.
This one here, these services provided, the employer anakupatia in terms of, like for instance, assuming Mika at my place, bills, water bills are carry of 20,000. Ananipatia ikiwa cash ama bill kampelekea.
Ingekuwa nakupatia kama cash, ingekuwa among the cash benefits. But now this one is the non-cash benefit.
So that's the part.
Anakulipia bill.
Na ifiki 20,000.
So tunaangalia kwa huo mwaka mzima amekulipia ngapi. Lakini ingekuwa nikuulize bili ya stima kwa mwaka mzima ifiki 20,000.
Depend na gani. Sikangi sana kwa nyumba.
Lakini kwa mwaka mzima
unamkwelewa najua ananipanga rent, I mean ananipanga electricity bill ya 1,000 ina maana. Hii inakuja 12,000.
moja kwa mwezi.
Na pale ni 18,000.
So kama unalipanga, alafu unajua pia tuangalie na tukubali maneno. Kama unalipa electricity bill ya 1,000 kwa mwezi, we can also evaluate your employer. Because I don't expect somebody earning 200,000 per month to be paying an electricity bill of 1,000.
It's 80% of the time hakupeka.
But that person, the Africans that we are, you cannot be paying 1,000 shillings. Because even the nature of your friends, when you think of inviting your friends to come visit you at home, utaki madharau.
Si ni wa Kenya. Na mtu already ameenda pale katrap hiyo stima. Let's be honest. Na mtu ameenda katrap hiyo stima. Bondi pia na nini? Alafu tena unakuja na kisha kwa hiki.
Kama uko nayo jaja kutaka tuambie. Sisi tunaumia. Anyway, we continue still.
Yeah.
Another example, so we can talk about the telephone bills. Telephone bills. So telephone bills ni pale penye employer either anakubaia airtime ama anakulipia bili yako ya stima. Ya simu, sorry. If you're on postpaid, he pays for your bill, and hii ingine anakubaia airtime, the way we're talking about still. So just say the taxable benefit is 30%. Is 30% of the total bill paid by the employer. 30% of the total bill paid by the employer. We can have number 4, furniture.
So assuming that the employer gives you like 15,000 discount in terms of
Airtime.
then 15,000 times 12 will be like 180,000. 30% of 180
is the taxable, should be part of your income for tax purposes.
part of the income for tax purposes.
Hi, so furniture, i.e., where the employee is provided, where employee is provided with a furnished house. Where employee is provided with a furnished house. So furniture is always, it goes hand in hand with the house. Employer amekupa nyumba imeshakuwa furnished. Let me say the benefit is at 1%. The benefit is at 1% per month of the cost of furniture. 1% per month of the cost of furniture. Then have number C or number D. We had the car benefits, the servants, the services, meant number D, right? So number D, we can talk about medical benefits. Medical benefits, i.e., where the employer pays for medical bills, where the employer pays for medical bills for the employee. The employer pays for medical bills of the employer for the employee. Full stop, then you say, the benefit shall be tax exempt. The benefit shall be tax exempt on condition that the benefit shall be tax exempt on condition that number one, there exists a medical scheme. There exists a medical scheme stroke plan in the company. There exists a medical scheme stroke plan in the company. And number two, the scheme is non-discriminatory. The scheme is non-discriminatory. So no one is discriminated. It covers all the employees. Now your story of non-discriminatory is very important. You don't only look at covering the top management, but you cover all the employees of that company. If it is discriminatory, then those who are enjoying will have to be taxed on it.
Employees of this cadre can go to employees of this cadre can go to Malta. Is that not
as long as you know the discriminatory bit is about you cover some and you don't cover others totally.
Yes.
So the number 3. Then for the 3 years that I'm here, let me be covered by that scheme. Sasa wakasho leo tunaweza wa exclude kidogo. Kwa sababu wanakuja kama kuna kazi. Ndio.
But I think on the basis of the occupational health and safety,
But
they can claim in case of any damage in terms of the occupational health.
But I think when you look at it, when you have a scheme and in your scheme, whatever we are looking at, you're saying it because from the KRS perspective, we shall come to look at your scheme. When you have a scheme and in your scheme you say it is covering all employees, even that casual worker who is there at your utamsaidia. Ndio. Hautamwacha nje kwa sababu ni casual, kwa hivyo acha tumsaidie from a humanitarian perspective.
But I think on the basis of data law, it is discriminatory because of the terms of reference. What are your terms of reference? Employee, part-time employee, contractual employee, these are the terms. So long as you're trying those terms, then you will not be entitled to medical benefit.
Hi, can we give just you say something? Number 3. So number 3. So the first one, there exists a medical plan. Number 2, the plan does not discriminate. Number 3, the benefit is enjoyed. The benefit is enjoyed upon hospitalization. The benefit is enjoyed upon hospitalization or a refund after medication, but not as an allowance. But not as an allowance. But not as an allowance. So is equal medical allowance ama medical cover. You know medical cover hapo kuna insurance cover. Whether uligonjeka ama kugonjeka, the cover is there. But the medical benefit is where ulipatwa kwa hiyo shida ya ugonjwa. Either employer akafoot all the bill ama ulitumia pesa yako ukakuja for reimbursement. Ndio. So that is what that's what you're defining here.
So it's different from the cover.
Very different. Different from medical allowance, different from medical cover. Because if the company has a medical cover for you, it is contributing on monthly basis. On monthly basis, what's that cover? But the medical benefit you're talking about here, you ligonjeka. If it's covering even your family, somebody had to be in hospital, and the employer had to come in and pay for the bills. So
we can leave it.
yes, it depends. Terms of reference is always there. We are covering you up to how much as the company. What's the difference between the medical cover? A cover is an insurance. A cover is an insurance. The cover is an insurance. The benefit is what we're talking about here. Still.
Yeah.
Lakini how frequent is the cost to the employer? Medical covers lazima alipe monthly. Lakini medical benefit atakulipia tu kama umegonjeka. Ndio. Na kama ni medical cover so unaenjoy the insurance relief. Because yamekuchukulia insurance cover ya medical. So it's your cover, you have to enjoy the relief. Hapa hakuna relief because hakuna insurance. Ndio. The insurance relief. No. Whoever enjoys is the cover ni ya nani?
It's yours, but at times you find some places they like staying there. So the difference. Who exactly pay the
When it comes to the insurance relief,
yes.
no. You enjoy the relief because the cover is yours. Whether you are paying it on your own or you are cost sharing, or the employer is paying everything. The benefit is yours. At the end of the year, enjoy your relief. Mwenye amekuwa covered, ndio. If the employer gives you, because it's 15% of all the premiums, ndio. And your question skipped me. Sometimes unaongea. Now, does the 5,000 apply if you are working outside the office, outside the country? Yeah, ni per diem. So it applied. And so, these benefits imekuwa mingi. Let's do housing benefit so that we go to questions. That is number E. Housing benefit. So housing benefit, you say this. So the employer provides the employee with accommodation. The employer provides the employee with accommodation. Full stop, then you say, when calculating housing benefits, when calculating housing benefits, employees are grouped into 4. Employees are grouped into 4. Next story is remuneration packages is a whole topic for tax ya baby class. It's a whole topic for tax ya baby class. Hapo nataka tukave I don't know how long. But alafu tena when they're testing, they test anything. So we have to a little bit expound on it. So it's making us take some time on it, but it is for our good still. Because again, it's making us learn more of tax. Not for the purposes of exam alone, but for the purposes of tax planning. So for tax planning. Number one, ordinary employees and whole-time service directors. Ordinary employees and whole-time service directors. Is it a whole-time or full-time? Ordinary employees and whole-time or full-time service directors. Then you say, the housing benefit shall be the higher of, they have 15% of employment income. 15% of employment income. We compare it with the current market value. And talk about market rental value, current market rental value. So we take the higher. In most cases, the rental value upewi. So what nachukua tu 15% of employment income. But when you have the rental value, employer accommodate the staff quarters that we always have. Amekupa the nyumba uishi ndani, lakini KRA inaangalia inasema kama hungepewa nyumba ungekuwa unajilipia rent mahali. So there's something you are saving out of that. But because we can't quantify this house that you've been given, at least we associate your house with the amount you're earning. So out of your total income from the employer, let this benefit be 15% of your income. So that we have a figure that we can tax.
Talk about now that the rental value is maybe 40,000 per month. We do times 12, give us 480. Then we check against the 15% of the employment income.
Yes.
And then the higher.
We take the higher. So kama rental value labda ni 40k, ndio umesema 40k times 12, una compare na employment income yote ni ngapi? Salaries, uongezo benefits zingine, total yake ni ngapi? Chukua 15% of it, compare with the market rental value, the higher of the two is the taxable income. But you less employees' own contribution. Employees' own contribution as rent. Employees' own contribution as rent. Sometimes employer anakupa nyumba anakuambia utakuwa na kucharge 3,000 per month kama rent. So what you paid reduces your benefit. Yeah. Just put a standard and say the whole-time service director is always available for the management of company's affairs. It's always available for the management of company's affairs. It controls not more than 5% of voting rights. It controls not more than 5% of the voting rights. So the most important, especially from an examination point of view, unaangalia the shareholding. What is the shareholding of that director? It must be a shareholding of not more than 5%. So the maximum you should be controlling is 5% of the ordinary share capital. Number 2, the second category of employees, non-full-time service director. And full-time service directors. So it's saying they control more than.
If we look at an organization like IBC, we have the CEO and the chairman who runs the show as a full-time employee. Does it fall as a full-time service director? And does it have 5% what we got?
So for you to be a director, you must be one of the owners. There's no guarantee that a CEO must be one of the owners. Can be employee of the shareholders.
So which means
so that is not a director, it's a CEO. So a CEO will be an ordinary employee.
But again, we have the CEO of IBC and have the chairman of IBC. So both of them are like full-time employees.
Yes.
So indirectly, which means our attention here is non-public sector organizations that are public entities. They are admissible based on the 5% on the figures.
Okay, yes. But again, you see, anytime you're talking about an employee, and that employee does not control the share, any share capital of that company, then it does not have the directorship. You can be the CEO who is not a director, then you fall under ordinary employee. If sometimes you're a CEO, can you have a CEO who is a director? Sometimes. You've invested in that company or in that entity, you control a certain number of shares, your shareholding does not exceed 5%, then you fall under the same category. That's why to December, but then there are two different sets of employees here. The first set of the employee is the ordinary employees. The second set of the employees is the full-time service director. So it covers the two. Kuna ule employee ambaye amepewa nyumba lakini si shareholder, like now the CEO, and he has been accommodated, right? And we have an employee who is also a director because he controls shares. And if I control not more than 5% of the shares, then my housing benefit will fall under the same category. So we are covering two categories of employees here.
But as the CEO of Capital Markets Authority has 5% voting rights.
Does the CEO of CMA vote?
If you take Capital Markets Authority, as the CEO of the Capital Markets Authority has 5% voting rights.
Capital Markets Authority is a unique company. Of late it has been listed. Of late it has been listed, and when it has been listed, then you have to look at the shareholding of that CEO.
Is it listed? No.
I think Capital Markets Authority is listed, right?
Because it's a regulator.
Yeah. Was it sometime last year, but what? Because it work on a shares one also, so you can invest in the Capital Markets Authority.
And then how does it remain a regulator?
So that is having a business within the business. Yes. So James Mwangi is a director. He controls more than 5% of the shares of equity.
I think it's a private entity. Yes. But no, we are saying is Capital Markets Authority a private entity or a public entity? Also private. But now,
But okay, that is a regulator regulating itself. So it's actually happening.
Kwa sheria kuna kitu tunasemanga self regulations.
that's the start. And how can
The conflict of
and
interest.
how can maybe be a regulator at the same time is a private entity, which makes it can bar others from entering the business.
Especially when the others are its competitors.
Yes. Yeah.
Anyway, so the most important thing is, if I'm, let me now go to the public sector, for instance. So, in the public sector, you don't have the shareholding. So you fall under the ordinary employee. Because you're a CEO and you don't own anything in that business. You can be sacked anytime. You've been given a house, you fall under ordinary employee. So the directorship is on the private sector. So you talk about the non-qualified service directors. Your wife. It is you. It is you. Legally, a proxy is you. You have influence in that company. When that company makes a decision, is it making on your behalf? Yes, it is. So even through a proxy, that is your ownership. Even through your wife, by the way, if you're a husband. Because for tax purposes, there's some incomes that my wife earns which belong to me. Are you aware of that?
Yes, but not necessarily the wife and the victim.
Ana file tu, lakini kama kuna tax matters, KRA can follow you as the husband.
So I'm supposed to declare your but
So if you want to avoid these taxes, you can be my wife. Anyway, let me explain myself. Look here, sheria haijabadilika na inasema kuwa for tax purposes, my wife is associated with only 3 types of income. Legally, anafaa file returns on her employment income at arm's length, meaning your kazi yako is associated na mzee in any way. You're not employed by your husband. You're not employed in a partnership where your husband is also a partner. You're not employed in a company where your husband controls more than 12.5%. So your job is your job. Your husband did not have any hand in you getting that job. That income belongs to you for tax purposes.
If the employee is a GSC, what of you are? GSC employees, what of you are?
So in that case, your husband is not your employer. And you're not employed in a partnership where the husband is a partner. So that income belongs to you. Your husband did not give you the job still. You have a self-employment income. My wife runs a business. Alifungua boutique, akafungua butchery, akafungua kinyozi. As long as you are not in partnership, again, she's not in partnership with me. So even the business income, I don't have any influence over. Kama amefungua kinyozi nikienda hapo kunyoa, nimlipe. And it's from lipa I consider kama donation. It's not that my other partner has come, even drawing a partner. Sasa kama ni loan alienda KWFT akapewa loan akafungua biashara yake. Alafu the third income that
alipandika kama
so akiniandika hapo inaleta vitu zingine tena. Because my wife employing me, I can dictate how much I should earn. So that salary that is paying will be a disallowable expense in that business. So she rather not employ me, I employ mtu mwingine wa nje ndio iwe expense. Again, it's bringing us to tax planning. Yeah. So the third income that belongs to my wife is the professional income. My wife runs an audit firm. Not the both of us run the audit firm. We audit firm yake. Because we both found ourselves in RCM tukisoma CPA. Akamaliza CPA, mimi pia nikamaliza, akafungua audit firm yake, mimi pia nafanya vitu zangu kando. That income belongs to my wife for tax purposes. Any other income apart from the 3, legally ni mzee. My wife has some rental houses, they belong to me for tax purposes. My wife has farming income, it belongs to me for tax purposes. In case of any issue regarding those income for tax purposes, KRA does not follow my wife. KRA follows me. Cases have consequences.
So you should encourage them to invest more on fundable assets.
My wife has invested in the shares of a company. The dividend she's earning for tax purposes belongs to me.
So I'm supposed to declare.
It's your income.
But
You
what
you
is
want to
what is
that's
offensive?
young.
What is offensive?
But again, KRA brought in a provision where kama wife anakupenda sana, anaweza andikia KRA barua akawaambia achana na mzee wako. This income belongs to me, ask me anything about them. If you tell that KRA, it will comply. Doing what?
Or filing the wife section.
There's no relief, it's an obligation. And if your wife decides not to file, then it's punishing you. You rather ask him, you rather ask her, umefile? So that kama sijafile ni file. Kama hujafile nifanye nini ni file.
Nakosa kufile mimi nalipa tax.
Kwa hiyo hizo penalties zinakuja kwako. For she, ndio. It's a nice thing.
Yeah.
But again, tunasema kuwa it is not cast on stone. Sometimes the circumstances where KRA will look at it and say, niachane na umze. There's some circumstances where that income, KRA will not follow the husband. Under some circumstances, kama where your husband cannot be traced. Amepotea. Dr. Obati. Where the wife is the sole breadwinner in that home, we cannot start following somebody mwenye anasupportiwa mpaka fair kuja tao. So the wife being the sole breadwinner, KRA will follow the wife. Ndio. Where amaamua vile tumesema, amecommunicate to KRA anataka akuwe assessed on all her income. Where the husband has decided to be insane. Yeah, of unsound mind, or the husband has decided to die. We cannot look for somebody who is dead. Ndio. The taxable income and controls more than 5%. What did we say?
Control.
Oh, but doesn't anything on that.
Yes, yes.
So you say he controls more than 5% of the voting rights. He controls more than 5% of the voting rights. Then you say the housing benefit shall be. So you compare 15% of total income. 15% of total income. So you compare that one with the market rental value. Market rental value, we take the higher. What is the difference between total income and employment income? Total income, it includes other incomes. Yeah. So simply, total income is employment income plus other incomes. Yeah. And of course, less employees' own contribution as rent. Less employees' own contribution as rent.
These are like institutional houses. Which you can say Kenya Pipeline has given staffs houses on 410,000, the house are 4-bedroom.
Yes. So you need to alikuwa na kuchop kwa salary yako, ndio. It reduces your benefits. Number 3, employees provided with leased houses. Employees provided with leased houses. So nyumba sia employer amekurentishia. Employees provided with leased houses. Then you say the benefit shall be so we shall have 15% of either employment or total income. 15% of either employment or total income. So it's either employment or total depending on the type of employee that you are. If you fall under the first category, the employer hajakupa nyumba yake sitakuwa 15% of employment income. Kama una fall for the second category, na nyumba si ya employer ameirent, then you'll be 15% of total income. So you compare that one with the market rental value. The market rental value, then you also compare it to the actual rent paid by employer. Actual rate paid by the employer, we check the higher. Then of course, less employees' own contribution as rent. With less employees' own contribution as rent.
So this completes us through taxation of living taxation of living costs. Sector.
Yes. Then finally, number 4, agricultural employees. Agricultural employees. Accommodated within the farm. Katika farm ya biashara. Accommodated within the farm. So hawa wafanyikazi wa majani chai, nyumba zao ziko hapo kwa farm, si ndio? Yeah. Let me just say the benefit shall be 10% of employment income. 10% of employment income less employees' own contribution as rent. Less employees' own contribution as rent. 10% of employment income less employees' own contribution as rent. By the way, a tax planning question can come by your statement. Wakwambie, this person is given job offer, 2 job offers. He needs to select one. One of the job offers, an employer and me. The 2 offers involve employer ambaye ni farmer. Alafu amepewa option ya kuchukua nyumba ambayo iko within the farm, and an alternative offer ya kuwa accommodated in the nearby shopping center. From a tax planning perspective, what advice could you give? Aishi ndani ya farm ama aende kwa the nearby shopping center, and why? Mwana mwambiwe tufanye tunataka. Aishi ndani ya farm. Kwa nini? Anakuwa closer to the farm products, farm inputs.
Not really.
You know, when he's accommodated outside the farm, then the housing benefit will be 15% of employment income. The 10% will only apply when accommodation is within the farm. So at when are you better off? When the benefit is at 10% or 15%? 10% is good, because both of you are enjoying the house. lakini mmoja analipa kama employment income yako ni 100k for instance, mmoja analipa 10% of 100,000, that is 10,000. Mwingine analipa 15% of 100,000, that is 15,000. So somebody being taxed on 10,000 and another one being taxed on 15,000. The 15,000 one pays more taxes. And you're looking on tax planning.
What makes the more considerate of the agricultural sector? So, again, agricultural employees.
So what makes KRA be very much lenient on these things, farming and agriculture? Because farming is the bedroom of Kenya. So we want to encourage people to do farming and to be involved in farming activities. That's how KRA will always be lenient on taxation of a certain sector if they know the benefits of that sector are high as far as the economy is concerned. Now, I know you need a break. Sometimes you wish to tungesema tuachie hapo, lakini time haituallow.
What about the part of the pension benefits? The contributory and non-contributory pension benefits employee.
So that was among the remuneration, the tax planning for the individuals. I think we highlighted them somewhere before we came in. The pension contributions by the employee and by the employer. Your employee how tax mpaka 20,000 kila mwezi. Your employee una allow, because that's an expense, you allow up to 20,000 per month. What comes from the employer is tax exempt. Alafu baada ya kufika retirement age, when you're retiring, you get some benefits, the pension income. The first 300,000, if they are received periodically, no tax. If as a lump sum, the 600,000 is tax exempt. It's somewhere in the tax planning. Now, let's have some 5 minutes or 10. But you can be looking at the pilot paper of 2021 question 1C. Question 1C of the pilot paper.
Which year?
December 2021. The pilot paper. Now, I think but when I can share the notes. Alternative dispute resolution, so that you don't do a lot of thinking. I think I have a summary notes on that. I can share it. So you look at part 1 and part B, the same thing, alternative dispute resolution. So badala ya kwenda kotini na kwa hizo tribunals, can we come up with some alternative ways of solving our issues? Now let's have part C. The pilot paper of 21 December. Part C. Omari Hassan has approached you as the tax expert to advise him on which of the following 2 job offers to accept. Hassan has received 2 offers of employment, both of which require him to report for duty next year on 1st January 2022. He has provided you the following information. Job offer A, Mawa Growers Limited. Mawa Growers Limited is a farm. Upon the farm, basic salary of 1680,000 per annum. Then you have free housing for him and his family. It's upon a housing benefit. Alafu kumbuke si director, but is an ordinary employee. 15% of employment income, 10%, sorry, this is a farm, 10% of employment income. With free water and electricity, services. The water is from a borehole, whether from a borehole or kanjo, employer ametupa for free. So you're getting a benefit. The electricity is also generated within the farm. It really doesn't matter. Free supply of the farm produce subject to the maximum of 50,000 per month. Now, if you're given the free products of the employer, what kind of benefit is that? ever heard of this animal called benefit in kind?
Yes.
So that's a benefit in kind. Out of the kindness of the employer, amekupa products that you to me. Are they taxable? Yes, they are taxable. If they exceed, it's a limit of how much? 36,000 per annum. So come when you employ Coca-Cola on free crates of soda. For the whole year, if the value exceeds 36,000, then you'll pay tax on the whole figure. So if you want to be exempted from taxation, then tafadhali wa request. So benefits is greater than 6,000 from Wakamzima. Because you don't tax the excess, you tax the whole figure. As long as it exceeds 36,000. That is how much per month? We try to avoid this thing of per month because for tax purposes, you always look at the annual income. And there is no guarantee kwa utakuwa unapewa kila mwezi. The cumulative figure for the whole year, how much is it? Alright. Then you have the reimbursement of medical expenses incurred on self and family, subject to the maximum of 125,000 per month. The reimbursement policy only applies to senior managers. Is it discriminatory? So whoever is enjoying has to pay tax on it. Senior. Payment of his children's school fees amounting to 180,000 per annum by the employer will not expense it in his books of accounts. So if the employer does not deduct it as an expense, who is paying tax on it? The employer or the employee? The employer. Let's agree. Let's use a common example. Salaries and wages is an expense to the employer. By the way, salaries and wages is an income. Because at any point of transaction, somebody is getting it as an income, as another person pays it as an expense. So salaries and wages, if you ask taxman, he always like looking at it from an income perspective because expenses are reason. So if that income called salaries and wages has to be taxed on the employee, then the employer has to subtract it as an expense. If the employer does not subtract it as an expense, then his profit to be taxed will be high. So meaning, amelipa lakini amelipia tax. Let me be practical. Kama the gross profit ya company A ni 500,000, ya company B ya ni 500,000. Tuna less expenses, allowable expenses, right? Among the allowable expenses, we have education. Education for the children. School fees. Sometimes you can pay school fees for the children of our employees. That is an employee motivation. It will be an expense in our staff motivation. Now, we are saying that company A subtracted as an expense. So meaning your education maybe require 50K. You in the subtract. Napa tulilipa lakini hatuku subtract like the case here. It was not deducted as an expense, right? If that is the only expense, how much is the taxable income? So we have to tax for 50. Do we have to tax? Even though there's like a 50 somewhere that he paid. So sio 50,000 iko hapa ndani. Akicalculate tax yake, si yako analipia tax hiyo 50,000 ambayo alitumia pia. And it should never be taxed twice. So if it was not deducted to in the books of the employer as an expense, then it means the employer paid tax on it. You should not tax the employee. So that one becomes a non-taxable benefit. Aye.
So in other words, we
On the
salaries expense.
salaries. Like now the salaries expense, under normal circumstances, we're gonna salaries expense. Naturally, they are allowable expenses. Ndio. So hapa kama tuko na salaries za maybe za 100k, hapa tutaless, huku pia tutaless. Kama ujaless, tax planning itakusaidia utaless. Ndio. Right? Ama tax investigation because it's a genuine expense. That's why ukienda kwa employment income, hakuna siku tumeambiwa kwa salaries and wages are non-taxable. So the 50
It's part of the company's
income that is being taxed. Unaona kampuni ililipa, meaning imespend. Somebody else is enjoying. But unfortunately, because it did not disclose, it did not subtract it as an expense, meaning wakati ilikuwa na tax the 30%, given that the 50k was part of the 500, which was being taxed at 30%. So because it has been taxed on the employer, the employee should enjoy it free of tax. Sasa, lakini kama ingekuwa ilitolewa kwa books za employer, singemaanisha employer ana tax 450. Sapo kwa 450, the 30% is not applying on the 50. So you have to tax whoever is enjoying. Because at the end of the day, it is an income, and an income has to be taxed. So the employer taxed it. The employer paid tax on it. The employee will enjoy it free of tax. Tuendelee tuone. So that's a payment of children's school fees. The employer will not expense it in his books. So the employer will pay tax on it. It will be a tax-free and untaxable benefit to the employee. His annual subscription fee to the sports club amounting to 50,000 will be paid by the employer. Is it a taxable benefit? Yes, it is. Employer is paying for the subscriptions not to a professional body, but ni starehe. Kama employer angekuwa analipa maybe some subscriptions to Ice Park, ama Law Society of Kenya, a professional body of this employee, then ingekuwa an untaxable benefit. Lakini how does that subscription benefit the employer? In no ways, ndio. Because hapa si sports club, unless kama angekuwa employed in a sports club, lakini sasa employed in a farm.
Must have physical fitness.
So physical fitness, you should take care of themselves on your own. If the employer pays for that,
For the gym.
you pay tax on it. Ni kama amekulipa salary. So you pay a tax.
So the employee will pay tax on
Yes. It's part of the taxable benefits. Hi, offer B, Kilwa Dishes Limited. Dishes Limited in a hotel. The basic salary of 21,60,000, free housing and meals, but only for sale. Then we have monthly entertainment allowance of 15,000. Entertainment allowance, you have tax. That's entertainment. Payment by the employer of his medical expenses, subject to a maximum of 800,000 per annum. The scheme covers all hotel employees. So no one pays tax on it still, because it's not discriminating. Payment by the employer of his life assurance premiums amounting to 5,000 per month. The set limit is 60K. Still. 15% of the premiums as an insurance relief. Then we have reimbursement by the employer of his annual subscriptions for the Journal of Certified Public Accountants amounting to 2,500 per annum. That's your professional code.
Yes.
You know, reimbursement Ni sawa na kusema umelipiwa. Ukitumia pesa zako alafu employer kurudishie, si amekulipia? Lakini kwa sababu ni professional body, then it becomes a non-taxable benefit. A 1 week fully paid holiday package worth 150,000 for his wife and children to visit him and reside at the hotel once per year. The package would also include visits by the family to neighboring tourist attractions. Can you consider it as a benefit in kind? He's employed in a hotel. Someone enjoy the products of the employer and enjoy the products of the employer. Omari Hassan has further provided the following additional information. His annual average medical expenses are as follows. Self is 150, wife is 300, total average medical expenses is 450. So 450 is 150 plus 30, plus 300, sorry. So on average, ana spend 450. Na pale juu, kwa hizo terms za Kilwa, alikuwa akue covered mpaka 800,000. So his expenses are within. And it's not discriminatory, it's non-discriminatory, kwa hivyo ataingia yote. His consumption of the farm produce under job offer A would average about 300,000 per annum. Does it have a limit?
Yes.
There's a limit, right? 50,000 per month. 50,000 times 12? 600,000. Na pale amesema iko capped how much? The much he consumes, right? Your evaluation should include both taxable and non-taxable benefits using the year 2020 tax rates. Evaluate the two job offers and advise Omari on which offer to accept based on expected net annual income. So can you get the 12 months? So let's get the 12 months. So we start with the job offer A. Offer A. We have the basic salary. Basic salary of offer A. I saying 1680,000.
Yes.
We bring in the benefits. We add the benefits. Housing benefit itakuja baadaye, because for housing benefit you need the total employment income. So housing benefit, free housing for him and his family within the farm with free water. We have water. Actual, hatujapewa. We have the prescribed. Leakage iko hapo juu, si ndio? How much? The 2,400? Ama nebanda kuchukua 6,000? Hii ni farm, si ndio? So we take the higher, ambayo ni ngapi? 2,400. We have electricity. Na tunaangalia actual, ambayo hatujapewa, and the prescribed 10,800, right? We also take the higher. So housing tutashughulikia baadaye. Free supply of farm produce, so you have benefits in kind. The farm produce. So you look at the actual. Actual is how much? 50 per month. So it's 50 times 12? So actually 600,000. How much is the set limit? 36,000. The benefits in kind. So how much we tax? The excess or the higher? The whole amount is taxable if it exceeds the set limit. So you have to pay tax on the whole figure of 600,000. Sasa kama the actual amount ingekuwa 30,000, then it would be dash. Yeah. It's just one way of discouraging the company from rewarding the employees their products so much. You're not in the business of giving out your products to your staff. You're in the business of selling your products. So yes, give them, but there's a limit. Not okay, enjoy sana kuliko vile wanauza. Nataka tax for you enjoy it. Because it can be another way of running away from taxation so that revenues are going down. The government needs to collect revenues.
But it's interesting the way to say,
How much does he consume?
Its consumption of the farm produce job of a day average about 200,000 per annum. Yeah, we can accept the mid.
So hapa, the actual consumption was not 600, it was 300. 600 was what was in the terms. For whatever it consumed, the enjoyment cannot exceed the 600. But in reality, how much was he going to consume? 300. So the actual is 300. So you're going to pay tax on what you consumed, not what the provision was. So there's a maximum you can reach. Yeah. Thank you for that. What else do we have there? Reimbursement of medical expenses. Do you have the medical benefits? Is it discriminatory? So come on, discriminatory, will be a tax. Yeah. How much was he going to bill study? For 50 chini. Na kwa medical benefits ni ngapi? 125 per month. So that is the provisions here. But in reality, at a spend for 50. So tumwambie kwa this thing is discriminatory. And for that reason, tulipia ngapi? What you enjoyed. What you enjoyed, the 450,000. You have payment by the employer of his life assurance premiums. So life assurance premiums. Chenye employer amekulipia, unalipia tax. He's giving you the benefit. So amemlipia ngapi? $180,000 per annum.
This one was this.
This was how much? Reimbursement of payment of his children's school fees. Wow.
180 per annum.
What is the time? 9 to 5.
Like 5.
I'm just trying to express what you're feeling. So school fees to children, it was taxed on who? Taxed on employer. And for that reason, the employer gets it free of tax.
If you had included up, if you had included it in the expenses and you get that amount of money.
Employer taxiwa. Kama alituambia, which was charged as an expense in the books of the company, then the employer will pay tax on it. The same argument, the salary that you earn is always charged as an expense in the books of the company. That's why you are taxed on it. The rental expense is charged as an expense in the books of whoever is paying. That's why whoever is receiving is a taxable income to that person's bill. Even the bad debts, specific bad debts, Specific budgets are charged as expenses in the books of the company. That's why when they reduce, then somebody is getting it as an income, it's an IDP tax. But the general budgets, they are disallowed. That's why if we reduce, if we recover it, that's a decrease in general budgets at IDP tax. Because as an expense, it was never deducted. Then it will not be charged as an income. I'm complicating life for now. Upon the dash. Next thing is which one? You have subscriptions. How much? Subscriptions to sports club. Hapo tulipia tax. Hiyo ni ya raha. Is it 50,000? 50,000. Then you'll be required to register as a member of the Institute of Certified Public Accountants. See the subscription to professional bodies. Ice Park. So this one you'll enjoy it free of tax. It's professional body. So do we have employment income before housing benefit? Not on how much? Before 93. 493 200. Alipewa nyumba. Ndio. Kwa hivyo tumpe housing benefit. 15% of that of 2493. 10% because agriculture. We're in agriculture. By fire by force. This answer I know. We basically 2493.20. So we have total employment income. If you add the two, napata 27, 42, 520. Kama angekuwa na other incomes tungeweka hapo chini. Na kama angekuwa na non-qualified service director na kuna other incomes, then hii working ingekuja huko chini kabisa. Because for non-qualified service director sisema ni 15% of total income. Employment income plus other incomes. List nani all time nani agriculture. Najua list nani agriculture is still 15% of employment income now. Because you cannot lease a house within the farm. Sawa. Lakini sasa unaangalia ni whole time ama non whole time. 15% of the total income. Kama ni non whole time, whether we lease the house or the house belongs to us. Offer B. Do you have the basic salary? Basic salary 21 ngapi? 21,60,000. Tumeongeza benefits. Benefit ya kwanza, housing benefit ataenjoy lakini baadaye sio. We have entertainment allowance, meals you can enjoy free of tax. Staff meals so as taxing. Sasa ni kama kusema hizi stories za tea and snacks that you give your employees. Hata uziekange mahali popote kwa credit income yao sio. So tuko na entertainment allowance of how much?
15,000 times 12,
So it's monthly. So 15,000 times 12,
180.
180,000.
180,000.
Medical benefits. Is it discriminatory?
No.
I don't even need to look at the limits still. So this one is non-discriminatory. And for that reason, you enjoy it free of tax. Enjoy it free of tax. Tuko na life assurance. Iko na life assurance. Sasa iko na life assurance premiums. So life assurance the employer amelipa. Kama ni employee angekuwa amelipa, then hapa kwa income hatungeweza kupote. Angeenjoy to the benefits. Because as an individual, paying my own insurance premiums is the same as kuchukua pesa kwenda kununua mkate for tax purposes. Wakati una calculate the taxable income, the benefit is what comes from the employee. If you are paying for your own insurance premiums, then it should not appear anywhere here. But you'll only enjoy a relief wakati una calculate the tax payable. But what appears here is what you get as a benefit. Employer in his own kindness ameamua kulipia insurance kwa lugha ya KRA ni sawa na kuongeza mshahara. Ndio. Ndio sababu tunaweka hapo kama benefit. How much was the benefit? 5,000 times 12. That is 60K. Higher of the insurance relief, not insurance benefits. A relief comes wakati una calculate the tax liability. So tutaifikia hapo. Bado mahali pa higher of bado. Hapa kwanza tunaangalia tu employer amekulipia. Hiyo amount amekulipia, in other words amekuongeza mshahara. So ni income unapata. Lipia tax. Then we have what else we have there? For the reimbursement, right? Annual subscription to the Journal of Certified Public Accountants. Theory dash, but you have to appreciate it. That one. The subscriptions. The Journal of Certified Public Accountants. Similar to professional journal. Journal of CPA. So because it's professional, it's like a dash. Then we have the 1 week fully paid holiday package. Is that one a benefit in kind? That one is a holiday. It's a benefit in kind because it's a product of the employer. So I see the actual is how much? It's 150,000. Then how much is the set limit? 36,000. So we pay tax on what? It has exceeded the limit. So do we have employment income before housing benefit? Dot number? It is when you treat it as a passage, it raises some eyebrows because of number one, there is no report, there is no evidence that this person is an expatriate. And number two, your employer is a hotelier. Ndio. And your employer being a hotelier, akikupa holiday kwa hoteli yake, you are enjoying the products of the employer. Ndio. So it looks more real if you consider kama benefit in kind. The total employment income before housing benefits, 2550. Then can we add the housing benefits? At what percent?
15.
So 15% of 2550? 382. 382,500. We have total employment income. Which is 29, 32,500. Ndio ukifika hapo hujamaliza swali. Hujamaliza swali. Ukiangalia sasa hapo, you know, when you are advising somebody from a tax planning perspective, you are advising him based on how much will you take home. So you need to get the tax implication so that you remain with the amount that remains after taxation. So can we have the tax liability? Hata kama naona umebit. Now the tax liability. Can even do it here. Tax liability, we have offer A and we have offer B. The beauty of it is that what any individuals. How do we tax the individuals at the rate of 30%?
No.
Yeah, the maximum 30%. So the graduated scale rate iko hapo juu kwa leakage.
Yes.
Iko hapo juu kwa leakage. So looking at the annual amount. Now when you look at the leakage from 1 shilling to 288,000, the tax rate is what? 10%. So we can go step by step. Hakuna shida. So the first 288,000 na tax na 10%. That is 28 in each scenario, ndio. So hizi income tuko nazo tunazitax in bits. So out of the 2.7 and the 2.9, we take the first 288,000, which are tax na 10%. Do you have the next? So between 288 and 488, how much income is covered there? That range, Silio. How much? Is it 200,000? Between 287 for the next bracket, 288,000 to 488,000. We are covering 200,000, right? So therefore, the next 200,000, rate yake ni ngapi? 15%. So 15% of 200 is 30. So 30,000, 30,000. Cumulatively, tutakuwa tumelipia tax on 488. So much is that? So again, we have next Yeah. So you have the excess. Sorry. So you have the balance. For the job offer A, the total amount to be taxed was 27,42,520. So I'm having 27,42,520, and I've already paid tax on a total of how much? 688,000. Your balance na chart na rate gapi? Is it 25%? 25%. So offer B, the total was 29,32,500. I've already paid tax of 688,000. So your excess na ichapapia na 25%. So the difference ya kwanza, how much? 513, 630. And here ya pili, 561, 125. So do we have the gross tax? The gross tax under job offer A. 612, 530, 430, 612, 430. Thank you. Na hiyo nyingine 659,925. This person is a resident. Si alikuwa kwa mwaka mzima from January. So he enjoys what? What kind of relief? Enjoy personal relief. You don't even need to crown. Utapewa kwa leakage. Of how much? Kwa mwaka mzima. I think 28,800. So you have 28,800. 28,800. Alafu school ikuwa na insurance. So you also enjoy insurance relief. Insurance relief. What insurance fanyia? You can have a working for the sake because of space. Kama kuna space hapo chini wewe fanya tu. So that insurance relief hapo chini yake tunaangalia 15% of what? The total insurance premiums zilikuwa 60k. Kama yeye pia angekuwa amecontribute maybe 60k, then the total premiums would be 120. Employer gave 60, yeye pia akapeana 60. Hapa ile ya employer ndio inaonekana hapo peke yake because that was the benefit. Lakini ukikuja hapa unachukua yenye employer amecontribute plus yenye mwenyewe amecontribute. So the 15% of 60. What do you have? 9,000.
Yes.
9,000. And how much is the set limit? 60k. So what is the lower? The lower is 9k. So therefore, hapa anapata relief ya 9,000. Na hii ilikuwa ya offer A. Sorry, offer B, sorry. So can we have the net tax? Eventually atalipa tax ya ngapi? Net tax. Net tax kwanza. So this minus that. 500 and 583. 630. Na huko kwingine 620, 622, 525, 125. So in conclusion, unaangalia the taxable income for A and B. Taxable income ya A ilikuwa 27, 42, 520. Na ya B ilikuwa 29, 32, 500. Then you less net tax. Hapa ni 583, 630. Noko kwingine ni 622, 125. So the difference is what we call take if you have a home. So under offer A, how much do you take home? Two? 215? 8890. Now offer B. Two? 2310.
Yes.
2310.
Yes, sir.
375. Now you can comment. But offer A ama offer B. They tell him after that struggle, usikose advice. So Omari should accept offer B, job offer B.
Other income
Hapa chini. So that tungekuwa na other incomes tumeweka hapa chini, labda kuna rental income, tunaangalia stories za residential na commercial. Everything just applies. Akona investment income, he has dividends from a non-SACCO cooperative society. Yes, in non-qualified inakuja hapa. Akona farming income, tunaweka hapo. Akona royalties atakuwa offered, zinakuja hapo. Then you have a total taxable income. Nakumbuka kama kuna dividends from a non-SACCO cooperative society, pia relief yake ataenjoy. Ndio. Kama kuna rental income na ile qualified, pia atapata the rental relief. Ndio. Kama kuna royalties, pia atapata the relief, the withholding tax relief. So everything just applies as usual.
This is benefits. The person is wearing this is the need. Is it the employee or the employer? And
Employee.
Employees as and yeah.
As the employer to the employment income in monthly. Anything you see for the year, it is about the employee. So you're advising the employee on which job offer to accept.
Benefits wanapata waya angalia hizo story.
There's nothing like finance.
Yeah, amekupea benefits. That's when you may enjoy it's an income to you. To the employees and expense, you have to subtract off that is okay with that. So Karen doesn't, I repeat what I said, Tabo. Karen is not very much keen on the expenses. He's very much keen on the income associated with that expense. So he's very keen on that person who is being paid. The other incomes, hapana. No, we can have some other incomes that he will receive or he will get when he goes for this job offer. It all depends on how the question is framed. Because unapata akona royalties that you receive under job offer A. Na job offer B hana hizo royalties. So the tax implication on the royalties will only affect job offer A. So it depends on how the question has been framed.
The rate of taxation.
It's an individual graduated scale rate. Lakini kuna pale relief. Say kuna royalties na attract the withholding tax of 5%.
These are royalties for other incomes.
For other incomes. So to take other incomes, alafu upate the total taxable income. So it's the total taxable income that will subject to graduated scale rate. Yeah. But if some other incomes have no effect of the job offer it takes, then it's not under our review. Because whether we take A or B, has no impact. Ini sijui examine atakuwa analeta with na intention gani.
Because ideally, if there are evaluating two job options, other incomes of the employee should not come in because he has some other farm income. That one does not go in with him to see job A or job B.
But sometimes it can, in my reasoning, there's a possibility of that happening because I may, other income mostly depends on the time allocated to a certain job offer. Like I can run a farm because of the time that I'm required in job offer A compared to B. Or even the location of that job offer can encourage me or can enable me get some other incomes. We can have a job offer that we don't know the type of employers that you have. We can have a job offer where you're told will only work for us if you don't run any other business. Especially kama labda si kuna hapa farm ama kuna hapa store za hotel. Kama ile business nyingine unaweza kuwa nayo ni another hotel. Simply as a restrict. So in short, it only depends the setup of the question behind us.
So you said bring other incomes generally.
Yeah.
Specify these are other incomes in above A and above B. Then the other traditional get only royalties upon other incomes and a pattern. So like for both how many royalties and a pattern of A and of B.
So if it's a general other income, then it has no implication on my decision making. So if I have to make a decision between job offer A and job offer B, now irrespective of the offer I take, royalties it doesn't receive, then that one is an irrelevant item.
So
I disregard it. But again, I'm saying it depends on how the question is set up. But as a kosa police kuambia advice, lakini wakwambie calculate the tax liability in each scenarios. So that means the other income pia lazima uziweke. So the setup of the question dictates. Eba amechoka. Kunda amechoka. Kama bado kuna nguvu ya dakika 10. Sometimes when you are tired, then you remember when is the exam. Then you force yourself to be. Unaamka 5. Now sometimes when you wake up at 5 and you think it's too cold, just open the curtain of your window and see outside. When you see people walking around, then you know you're not early bird. Let's check May 2019, question 3B. May 2019, question 3B. Sometimes you have to plan for such kind of classes. So you plan for this one. You know, ulijipanga. Ukanunua the food. So let's just, that should be our last question. It's okay, it's okay. That should be our last question for today. The tax planning question. Peter Samoe. Peter Samoe. So May 20 ngapi? May 2019. May 2019, 3 boys. Now, Peter is an employee of Zawadi Limited and earns a salary of 140,000 per month. While his wife, Sabina Wanga, works in Lindi Limited, a firm in which Mr. Samuel controls 18% of the share capital. So what kind of employment is that? Is it at Armstead? The husband controls more than 12.5%. So in simple terms, the wife is an employee of the husband. And for that reason, the employment income of the wife belongs to the husband for tax purposes. Hi. Then we are told her salary is 60,000 per month. Sabina owns the house, which is occupied by the family. Wow. For which the market rental value is for 5,000 per month. And I own the house. So do you really need the market rental value? The market rental value is relevant kama employer angekuwa amempea nyumba. There's a joint housing benefit. The financial story of 15% compared to the market rental value. But this house is hers. Ndio. Hii house ni yake. No problem. The house was constructed in 2017 at a cost of 6 million borrowed from a SACCO at an interest rate of 12% per annum. Sabina has insured the house and paid insurance premiums of 4,800 per month and city county rates of 6,900 per annum. Mr. Samoe paid insurance premiums for his family of 4,600 with an insurance company incorporated in Uganda, but operating in Kenya. It doesn't matter. Zawadi Limited paid school fees of 80,000 for the couple's children, which was expensed in the firm's income statement. So did the couple pay tax on it? Yes, they did. Still, because that amount was expensed in the company's books, so it has to be taxed to whoever are enjoying it. Still. Then you're being told for 8 marks, suggest 4 tax planning schemes that would minimize the tax liability of the family. Was separate. So your wife is a
I think that's a
implement income your wife is and by the way, it is also a tax planning measure, but not to the husband. Yeah. But to be fair enough to the family, because wanapendana sana, you can tell her to look for a job elsewhere. I don't want to have English. They can be. They can employ someone else. In which income? So they can employ the child.
Employed technically
By the husband.
So the wife's salary is.
It is allowable, yes, in the books of the company because it's not employed in a partnership. You know, in a company, the owner gets the salary that is allowable because there's a separation of ownership.
business.
and business. So if it was a partnership or a sole trader, then hapo tungesema toa wife kwa payroll, weka mtu mwingine, so that your salary iko allowable, ndio. But the best way to put it is, so let's say this.
But you cannot advise that as a quite a job, because the wife also gives the money.
Yes, but you advise her to get a job elsewhere,
So
that she's responsible for paying her own taxes. And you know, when you pay your own taxes and your only income is employment, it's a benefit to the family because we also enjoy a personal relief. But if my wife has no any other source of income, the only source of income is employment income, and is employed in a company where I control 18%, then it's only one member of the family that will enjoy the personal relief, because that employment income belongs to the husband. The wife has nothing to tax, and if you have nothing to tax, then there is no relief you are getting. So number one, tax planning measures to the family. Number one, the wife should be employed. The wife should not be employed. Let's make it simple. The wife should not be employed in a company where the husband controls more than 12.5% of the shares. The wife should not be employed in a company where the husband controls more than 12.5% of the shares. So that she is assessed on her employment income. More than 12.5% of ordinary shares, some are voting rights. So that she's assessed on her employment income and enjoy a personal relief. And enjoy a personal relief. Now this house, they constructed the house by taking a loan from SACCO. They should go in for a mortgage instead of getting a loan from SACCO. Yeah. So we just say this: the loan to fund the construction of own residential house. The loan to fund the construction of own residential house should come from a recognized financial institution. Should come from a recognized financial institution for mortgages. A recognized financial institution for mortgages. So that up to shillings 300,000 per annum, of the mortgage interest is allowable expense. Up to shillings 300,000 per annum of the mortgage interest is allowable expense. Then tumwambie, what about your story ya school fees? Imelipwa na employer? The school fees paid by the employer, should not be expensed in the firm's income statement. Should not be expensed in the firm's income statement. So that it is taxed on the employer. Then you can also encourage them by saying that they did the right thing, your story insurance. Taking up of insurance policy. Taking up of insurance policy is encouraged. Is encouraged. Due to the insurance premium enjoyed, insurance relief enjoyed. Due to the insurance relief enjoyed, of 15% of the total premiums, up to a maximum of shilling 60,000 per annum. 15% of total premiums up to a maximum of shillings 60,000 per annum. Unaweza kumsikia hapo.
This part of the C, quick one on the C, core benefit that could accrue from the effective use of ICT in tax administration.
What are the benefits of using ICT in tax administration? And then swali kama hivi kuja hiyo ni 3 marks. What are the advantages of a computer? Tunaanza kuongea backup, speed, efficiency, convenience. Nebo maandika ngapi mtu andike example?
Efficiency, convenience, and
Backup, it is used only reduces paperwork. There's always this accuracy will be there. There's always this contentious point, history of confidentiality. It's a little bit contentious when it comes to IT gurus. Those stories are hacking. There's a situation where you can argue either way.
because even if you use it from your own email, Yahoo, and etc., but the server is from the same institution, that information can still be retrieved.
Yeah, we have people who go to class to do that. Yeah.
Yes, and you
Those classes should be banned.
Yeah, because
There is legal hacking.
yes. Because if the employer wanted to investigate that, he got an email asking a client for some bribe, and the client has called them, saying that the employee is asking for this, and then you are denying, they can retrieve that information and bring to it using the server of the institution.
You know, if my employer wants to sack me, he'll always sack me without even having a lot of issues. Because all of us already would make a lot of mistakes, especially in that dark eye. Yeah, but anyway, it's a contentious point which, because of its contentiousness, you can have it as a disadvantage, you can have it as an advantage, depending on you're arguing from which point. Yeah. Okay.
A question on this question, please. Can you the calculation of each of it?
The tax liability. Yes, we can. Yes, we can.
So in this part, in this case, we include the white salary as
So itakuja kwa other incomes. Because employment income yake siko. Alafu under other incomes you call it wife's income deemed husbands. That is the name of the wife's income. Like a wife's income deemed husbands. Because he has his own income from employment, right? Then over and above his own income, there are some other incomes that she is enjoying. One of the other incomes is wife's income deemed husbands. Hapo kama kichwa unachora hapo chini yake employment income ya wife. Ndio. know sometimes you should be mentioning these things. Haya, sawa. Kama angekuwa na investment income ambayo na qualifying, anaiweka hapo, ndio. Na kama hiyo, by the way, this thing has come to me in my mind. What if sasa kama hii basic salary ya 2160, hapa ndani wangesema net of pay of 200,000. Which figure would you have put here? Just sasa vile vitu zinakaa, lazima nirudie pole pole. Hapa ndani wamesema basic salary, alafu ameweka net of pay. Pay ni hiyo. Na hiyo pay iko labda 200k. How much would you have put here? How much? 2360 ama 2160 minus 200 ama unailenga? May add. By the way, add. Because you should always tax the gross. That's why we're looking at investment income. Dividends from Sharia Cooperative Society net 850,000. But other incomes tazirudishanga 100%.
That pay of 230 come under.
Hapa chini,
Yes.
utakuja upeane relief ya pay.
You can still leave it as it is, then you can leave the pay.
Your taxable income will be understated. So you should tax the gross. Kama ni net of pay, ama amesema pay deducted, then add your pay iongeze hii figure. So that you calculate the total taxable income, you tax, then you appreciate for this tax that I'm paying here, this gross tax. Hapa ndani una pay ya 200,000 ambayo unafaa nitoe. Nisipoitoa nitailipa tena. Because when you are calculating the taxable income, you calculate it assuming you didn't pay any tax. Sindio? Alafu baada ya calculate kwa assume haukulipa tax yoyote, hii figure unapatia sasa ndio unakuja unajiuliza, hii ndio tax yangu based on all the incomes that I earned. Is there any tax I had paid earlier? And the answer is yes. One of that tax is the pay where the employer was charging me monthly. You give yourself a relief so that usilipe tena.
So the whole 200 or less
the whole 200,000 that is hapa. Sasa. And sometimes examiner badala kusema net of pay anaweza sema tu basic salary alafu hapa kwa brackets aweke pay is 200,000. How do you account for that pay? So the gross, the basic salary would be how much? Ambayo tunamwambia acha kusumbua. Do you add it back? Hapo uki-add back unanyoroshwa. So you'll only add back if the examiner has given you the reason to conclude that it was deducted. It is net off. It is always gross unless otherwise stated. So this would only mean that in 200,000 already iko hapa ndani hawajaitoa. Lakini ukifanya hapa tax liability ukuja upeane pia pay relief. So tutakuwa tumekuhighlightia kuwa this is the pay that was charged by the employer, so give him the relief.
The pay that is official was like a payment in advance.
Yes.
But now you have calculated the actual pay, then you remove that one that you are paying in advance, and then the net amount.
It is like advance tax. It's in withholding tax. Yeah. So kisha calculate the correct amount of tax, toa ile ulikuwa umelipa mapema, so that ile balance inabaki ndio pelekee KRA. If it will be a positive, if it will be a negative, you get some courage and claim your refund. Simaliza weekend salama. The school fees. The school fees, it takes us back to kale kawatingetu hapa. Kama imetaxiwa kwa employer, employee hata taxiwa. And for the school fees to be taxed to the employer, then it should not be expensed. In this case, the school fees for the children was expensed in the books of the employer. So the employer never paid tax on it. The employee will be taxed. That's how. Become salaries and wages. This is not what expense in the books of the employer. That's why the employee pays tax on them. But if they are not expensed in the books of the employer, then it means pale kwa profit before tax, hiyo figure pay iko hapo ndani. Akitax ya 30%, pay iko hapo ndani ana tax. So the employee will enjoy it free of tax. So for that benefit, for tax planning, such kind of a benefit, try to negotiate with the employer kindly, usiweke kama expense kwa books zako, so that ulipie your tax, sisi to exempt you. Will the employer listen?